The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, as we wrapped up the week of market trade on Friday and technically officially started the month of December, quarter wheat found a little bit of continued strength to wrap up the week, while soybeans and meal found pressure, and of course the cattle market continued to stay volatile. What else is new here this week? Joining us to talk about things, we welcome in Christy Van On Sheeses with Van On and Company for market analysis here today on Market Talk. Christy, good to catch up with you. Hope you had a great Thanksgiving. Hope things are well there in Minnesota.
Yeah, it is. It's been fantastic, and it's hard to believe it's already December. When you're writing the update and you see that change in month, you're like, holy cow. I mean, this is just flying by.
Yeah, the year is flying by, no doubt. And before we know it, 2024 will be here, and we'll be talking about a new year, but we still got 1 month to go. And, end of the year is always an interesting time in the markets. It could be volatile. It can be a time where a lot of folks try to wrap up their marketing for the year before we flip the calendar officially. And it's been an interesting week in the market trade, to say the least. I'll start with soybeans and meal, the big loser on the day, Friday. I know we've been watching South America weather pretty closely. I know we got a crush report out Friday too, so I wonder if there was some influence there. I don't know. What's your take in soybeans? What gives with the pressure to round out the week?
Yes, we have to remember soybeans right now are in a growing season in South America, where anytime there's weather built into that forecast, or rain built in that forecast, you're going to start seeing some selling pressure, just like how it is here domestically into that June, July timeframe, even towards the end of July. As soon as you see those forecasts, whether that rain is actually going to happen or not, when you see that rain come in, that's when you start to see these people sell this market. And so there is rain starting to be forecasted for Brazil. The amounts, to be honest, I feel like are a little bit limited, but regardless, you're seeing that show up, and that's where you bring those selling pressure in. We have to remember that managed money has been aggressive sellers of commodities, corn, wheat, cattle markets, and they have not really been there for soybeans. And so if they really want to even up some positions, selling soybeans is probably going to be what they want to do. And we're seeing that happen right now. So I think a lot of this is managed money, just due to the change in dynamic in Brazil. And then you're going to come in here over the weekend, and if the rains don't materialize, you're going to see probably all this market come back plus some, right? But if we see those rains, we are going to be on a defensive mode for a while. Extended forecasts for Brazil still offer the same situation that we've been in, which is too wet for the south, too dry and hot for the central to northern parts of Brazil. It seems like you also saw the dynamic shift from being a soybean focus to a corn focus for Brazil's northern or really those key second corn crop areas. They really start planting more into that January, February timeframe. So you have a ways off, but we know if you're going to continue to have issues in South America in those areas, it is going to spill over to be a corn story. They are already decreasing corn acres the way it is. So even though they have a nice production estimate, it's off of last year's. And if we have issues continuing, you could see that further decline as well.
In terms of beans here, I think it was on Monday, maybe we bounced off that 200-day moving average at 1325 area support in January beans. I mean, if we see the rains materialize and maybe try to turn this market back down a little bit more, would that be kind of the target area you're looking for support here on January beans? What do you think, Christy?
Yeah, 1330 has been a level that's held very good for these soybeans. It didn't hold today at the close. So we're going to get a close below that level. As a firm, we've wanted to actually be buyers of beans between 13 and 1320, and we really haven't gotten that opportunity until today. So we think that there's still enough risk out there, weather premium risks out there, to justify saying, hey, look at some calls, maybe possibly down when we're in this area. I think $13 is going to be that psychological level that'll hopefully hold this market, just because domestically we have tight supplies. Crush is profitable. I'm not sure, they've decreased exports recently. I'm not sure you can really justify that. I think you're going to have to start backtracking on that, because we've had some really good consistent sales. They have not been anything wow factor, but they've been consistent. They've really been adding up. And so I think that there's enough stories around this market. We want to be, but we've also been really aggressive on sales. And so part of that is just having some calls above, just in case this market does take off over previous sales.
All right, let's flip over to the corn market. Corn's had a couple decent days here this past week, and we kind of got D's corn, I know, delivery period happening. D's March corn, I mean, decent up day a couple days in a row here. What's your take in this corn market, though? Are we just kind of locking it away in the bin at this point? Anything else that we haven't sold or marketed or taken to town at this point, Christy?
Yeah, I think so. The corn market, I'm very thankful we're seeing this market come back, because I was a little bit concerned about corn. The fundamentals behind corn are not pretty whatsoever. We're going to battle that dog for quite some time, because we are well above a 2 billion bushel carryout. So we are going to have a monthly report that consistently reminds us that we have a lot of corn in the US. So we can get all these other little stories. You can get issues in South America. We can have our demand start to pick up. We know ethanol profitability is great. So we have these stories that give us the possibility and potential for a rally, but we are going to get monthly reminders that we need this to sustain itself for high demand. And so for corn, what we did today is we started to look at some 24. You look at D's 24 corn, 512. I think a lot of guys are at the farm right now looking and saying, I don't want to sell any corn below $5. And now I'm seeing that potentially happen for my corn in the bin. I do not want to have to deal with it next year. So you can look at some tools to be using for 24, to be looking at some profitability above that $5. So we started to look at that. As far as corn goes, I think it's really riding on the back of wheat. You see KC wheat over 50 cents off its low. So corn, wheat, all made new contract lows earlier in the week and are showing some great signs on the chart to rebound. And it's led by wheat. And typically, if we want to see something dig out of a hole, it does need to be led by wheat. And I think as long as wheat can be a friend of corn, corn can get up to some of those price counts, hopefully 5 to 509 on March. And then even for those deferred contracts coming back up to that 515, 525 level.
And to your point there about looking at D's 24 corn, how aggressive are you getting on 24 corn or bean marketing here at this point? I know a lot of times we get to the end of the year, folks will kind of sit down, look at all their books, it's tax season, et cetera, but they'll also look at that marketing plan. I mean, should we be thinking about getting super aggressive here at this point, or at least dipping our toe in the water a little bit, Christy?
Yeah, we just moved to 30% on next year's corn marketing today. So we went from 20 to 30%. We did it in a couple different ways you can sell, but most of ours got done in an option strategy of some way, somehow, depending on if you are tolerant to margin risk or not. That kind of decided where you're at. And so we did move on that. We were aggressive when 24 beans were above 13, that 13 to 13.10 mark. That's where we were aggressive here. I had the conversation today with somebody, and we're down into this 1280 to 1285 level. I'm willing to kind of wait it out and see if we can get back up to that 13.10 before we really move on too much. But regardless, if these prices are profitable for you and you're locking in inputs, it's not a bad idea to be looking at some form of downside if you don't have any on.
We are having a conversation today with Christy Van On. She's with Van On and Company here on Market Talk. Christy, you brought up the wheat markets, and I want to talk about that a little more with you here. You mentioned the big rally in KC wheat. We got good winter wheat ratings here in the U.S. Chicago spring wheat have kind of followed along with KC wheat, it's felt like. And I know a lot of this chatter about Russia possibly putting on an export quota, China in the market, looking for some HRW wheat. I mean, overall, what do you think the upside potential could be here in wheat? I guess to me, wheat's really surprised me this last week overall.
Yeah, wheat's a dog. It just doesn't want to get going, and we're finally seeing those signs of it coming back to life. And so I think what you really have to do is treat it on retracement counts and say, okay, let's go from high to low and pull up some retracement counts and say, as of now, this is kind of what we're looking at. So when we focus more on spring wheat for marketing, and we're really hoping that we get another crack around this $7.87 to $8 mark for some marketing. Now that's, still a ways off when you're looking at it. The carry has helped. One of our biggest concerns here is carry decay. And what carry decay is, and it's pretty tried and true in these markets, is when your contract goes off, your next contract finds a way to kind of slowly work its way down to the other one. So let's say for corn, for example, if D's corn goes off around this 450 level and March is 480, theoretically, you see this March sort of bleed itself down to 450. So that's our major concern. And that's part of the reason why we've tried to be on top of things in the beginning, is that if we're going to get this bounce, a seasonal bounce in the next 2 weeks, let's be aggressive before we kind of peter out and hopefully not see that carry decay. But if we start to see that, let's utilize this front month kind of run that we're seeing right now. So we're hoping it gets back up to that 787 level for Minneapolis wheat. And I think it has the stats behind it. Managed money's been really, really short. So to see those kind of ease up on some positions, that would be great. The world dynamic has not really shifted at all. There's still so many issues around the world. You're talking about Russia and export bans. You're talking about that. You're talking about poor conditions in Australia. So there's so many aspects to wheat. It just seems like there's so many little stories. No one wants to make a big story out of it, if that makes sense.
Yeah, no, that does make total sense there. Well, another thing overall, overarching theme in the grains, I think too, watch the outside markets. Crude's been volatile this week. We've had that OPEC plus meeting and the production cut there, and talk that Brazil's joining OPEC. And then you throw in the stock market and the inflationary stuff. The Dow's been looking strong this week. The dollar had a big up day earlier in the week. Outside market influence, anything out of those things standing out to you as far as a big influence here in the grain trade right now?
Yeah, I'm a little concerned that you're seeing people step away from commodities back into kind of your stock market situations, right? For so long, people kind of wanted to be part of commodities because of that talk of inflation, right? That's part of commodities were inflating. People wanted to be part of it. But if we're getting to a point where we feel like inflation's starting to slow and we're feeling stronger about the economy, you may see that switch from people being interested in commodities going into the Dow. Crude oil, talk about a classic buy the rumor, sell the fact. Mm-hmm. Crude oil just took off on the fact that OPEC was considering a cut. We got the cut plus some, and then the market completely sold off out of that. And so, we feel like when you're looking at crude oil, the range that we're at right now, anywhere from the $70 to $74 range, you should be having conversations with your fuel buyer about what your needs are. And I think that's one thing, okay, you put your grain in the bin, you don't want to deal with grain marketing for the next 2 months, that's fine. But what you should be focusing on, though, over the next 2 months seasonally is your fuel needs. So make sure you're paying attention to that and having those conversations with your fuel buyer, because seasonally coming up pretty soon is one of the better times to book some of your needs.
All right, let's go over to livestock. Cattle, Christy,
Can we not
make sense of, can we not? I can't make sense of this market, honestly. You lost another little over 5 in feeder cattle again on Friday, 2 to 3 in the fat cattle trade. I mean, it's just been a carnival ride, so to speak, here, this futures trade since the previous Friday, since after Thanksgiving. It's just been crazy to watch this cattle market. Any thoughts? Is this purely funds getting out of the market, and now we're just seeing this whiplash until we find our support here? What do you think?
Yeah, I think it is a lot of funds. Like you want to check how bold you are. You participate in the cattle markets right now, right? That is not for the weak-hearted. And the cash trade is actually holding on very well. I've had multiple conversations with guys. That's not changing. People are looking to buy feeders right now, and those prices aren't really changing. And so we're not seeing it. We're seeing it more in the futures board. And honestly, I think eventually that's going to be a huge opportunity for producers to see that the futures board is such a discount to cash. Now we got to write it out. We got to see if those come together some way, somehow. But it's pairing up to be a really big difference between the two of them. So that leads to manage money and saying manage money is being so aggressive right now. I think another problem with it is that when you see these aggressive movements, sometimes it brings out the worst emotions in a person. So when you're thinking and you're saying, hey, fundamentally, we know that there's tight supplies. All of a sudden, you're starting to have these questions of, do we have tight supplies? Are we really that tight? Do we have those concerns? Now, we know cattle, you can't change the dynamic in a quick fashion. Grain markets, we get a new year every year. Not the same situation for cattle, but you're starting to have people have that conversation. And when they start to have that, you have people bring in and be even more sellers. I think the dynamic is the same. We're just dealing with manage money being really, really aggressive on wanting to liquidate these positions. They were long for quite some time. It's a battle we're dealing with. It's also, cattle is a thinner market when you don't have a ton of participation. We need somebody to be that buyer to step in. And I think you'll eventually see that, but it almost seems like no one wants to be that buyer until you start to see managed money slow down. We've had a couple different times where it looks like possibly they will. And then the next day you slide $5 lower. And the moves are so large that you're really taking out the smaller trader. Right now, a smaller trader is looking at it and saying, I don't know if I have the stomach to be dealing with $6 moves on a consistent basis. So until you stop this volatility, until you see managed money kind of stop that liquidation, I think we're a little bit stuck here.
So how do we manage some of that emotion? And this might sound silly, but I mean, do we just ignore looking at the futures quotes for fats and feeders and focus on the cash market and what's going on at the sale barn and look at our own break evens, our own margins? I mean, again, that might sound silly to just not look at futures, but I mean, maybe that would help manage emotions here as we go through this time period. What do you think?
Yeah, I've had a lot of conversations about LPR, talking about your cattle insurance. Pretty much the way to look at it is almost like it's a subsidized put. And so I think that's the best way to start, is saying, hey, if we're really concerned, if you're concerned, if you need something to sleep at night, go that route because it's a subsidized put. It's going to be cheaper than trying to do it in your own account. You can put a floor underneath yourself to know, hey, I know that below this I'm protected. I would say that would be the first start as far as looking at trying not to panic and participate. I also think the constant reminder that the cash really has not changed yet is really a driving force not to chase this market too much. So I think that's also one of them. It's also been easy to look at the chart and say that 2 standard deviations away from trend line is a pretty tried and true, that not a lot of markets extend a lot past that. Our lows on cattle have been around that 2 standard deviation. Went a little bit lower in feeder cattle, kind of held it on live cattle. So we have that comfort there. It's not for sure, but it should help for the meantime to keep some sellers from coming in too much, because it just doesn't look good on the chart.
Hog trade, I feel like, just real quick, I feel like it's kind of been following cattle. We were down a little bit Friday, not as bad as cattle though. Any notes in lean hogs right now, Christy?
Yeah, talking about 2 standard deviations, like or hog markets are like the dream for that one. So if you look at Feb, came to 1.2 standard deviations, and your deferred contracts hit 2 standard deviations on the dot and found buyers. So that market is kind of that same situation, except I feel like we've seen better progress bouncing off of those lows, where we haven't seen quite the follow through that we've had into the cattle markets. So those deferred contracts are actually looking really good on the chart right now. Your Febs, your Aprils, your Junes for the hogs. When I talk about 2 standard deviations, if you remember back to like classes, when you think of your bell chart and how at the very ends it's so thin, you don't have a lot of occurrences there. That's kind of what you're looking like on a chart, is that yes, it can happen, but the likelihood of a lot of trade above and below those levels is just not statistically there.
All right. Final thoughts as we wrap it up here today, Christy. Anything else you want to mention or reiterate to folks today?
Yeah, I don't want to sound like a broker right now, but I'm going to sound like a broker for a quick second. And that's when it comes to corn. Corn option volatility is so limited. Corn options are so cheap, in our opinion, right now, that to take advantage of them to use in your marketing, I think is huge. To be looking at saying, hey, I might have to make some corn sales sooner than I thought. Utilize some calls. There's some conversations out there that are very, very bullish corn. And I'm not saying that can't happen, but I do think that it's a little bit risky to be risking that much on the hopes that this market runs. And so I think you could make some good choices on the cash side, especially because on friendly basis as we finish out this year into the beginning, especially at ethanol plants, that you could utilize that. And then those options are very cheap right now for corn to really add to your marketing plan.
Christy, if folks have questions, they want to reach out to you and the team there at Van On and Company, I know they can get a hold of you easily. How can they reach you?
Yeah, you can call us at 1-800-648-5494.
And I know they could find you online too at vanonco.com. Christy Van On Sheeseth with Van On and Company. Thanks for joining us on Market Talk today, and we will talk to you again soon.
Thank you.
That's going to do it for the show. Find us at markettalkag.com. I'm Jesse Allen. Have a great weekend.